Every trader starts with hope. Hope that today will be different, that this trade will finally change everything. You open your charts, you see a few candles moving, and instantly your mind starts racing. You feel like you're already late, like money is being made without you. And that's where the first crack in your routine appears. Instead of waiting for your setup, instead of following your plan, you click the buy or sell button just to feel involved. It feels small, almost harmless, but that one small break is how the damage begins. A trading routine is not just a schedule, it is a mental boundary. It tells you when to trade, when to stop, and most importantly, when to do nothing. But when you don't respect it, you give your emotions permission to take control. You start checking charts at random times. You take trades that don't fit your strategy. You move your stop loss because you don't want to be wrong. And slowly, your trading turns into a game of impulses instead of a game of probabilities. At first, you might even make money. That's the dangerous part. You break your routine, take a random trade, and it works. Your brain immediately learns the wrong lesson. It tells you, see, you don't really need rules. You're smart enough to feel the market. So next time, you break the routine again. You trade earlier, you trade more. You take setups that are weaker than usual. And because you got lucky once, you start believing you're skilled. But markets are brutal teachers. They let you feel confident just long enough to take it all away. One day, the random trades stop working. The same impulsive entries that gave you profit now give you losses. And because you have no routine, you have no anchor. You don't know when to stop. You don't know which trade is part of your system and which one is just emotion. So you keep trading to fix the loss, digging the hole deeper. When you don't follow a routine, you also lose your ability to learn. A proper routine allows you to track what you did, why you did it, and what the result was. Without it, everything becomes messy. You can't tell if you lost because your strategy failed or because you broke your rules. Every loss feels personal. Every win feels like proof you are special. That emotional roller coaster is what destroys most traders, not the market itself. Another thing that changes is your confidence, not the fake confidence from a lucky trade, but real confidence that comes from consistency. When you follow a routine and still lose, you can accept it. You know you did the right thing. But when you lose after breaking your routine, the pain is different. You don't just lose money, you lose self-respect. You start thinking, I knew I shouldn't have taken that trade. That regret builds up. Over time, it makes you afraid to even take good trades. Your risk also explodes when you ignore your routine. You start increasing lot sizes to recover losses. You take multiple trades at once. You stay in bad trades hoping they will turn around. A routine protects you from these mistakes by forcing you to think before you act. Without it, every decision is made in a rush, driven by fear or greed. The saddest part is that most traders don't fail because their strategy is bad. They fail because they don't follow it. They jump from one idea to another, from one emotion to the next, never giving anything enough time to work. A routine is what turns a strategy into a business. Without it, trading becomes gambling, no matter how smart you think you are. In the end, the market doesn't care about your feelings, your hopes, or your excuses. It only responds to discipline. If you respect your routine, your results become stable. If you break it, your results become chaotic. And chaos in trading always leads to the same place: frustration, losses, and the feeling that the market is against you, when in reality, you were fighting yourself the whole time.